The choice between clearing our debts and building a financial cushion is one that many of us have considered at different times in our lives. And while both have their pros and cons, the challenge is to decide which one to prioritize. In this video, we'll help to guide you closer to an answer that fits your unique financial landscape, with 7 key considerations to help you decide which should take precedence. Stick around till the end, as we'll also cover a few key steps you can take right now to put your decision into action. Number 1. Type of debt and interest rates. One crucial factor to consider is the specific type of debt you're grappling with, because not all debts are created equal. There's a vast difference, for instance, between high-interest credit card debt and a lower-interest home mortgage. High-interest debts can quickly become burdensome, with the amount you owe ballooning over a short period due to compounding interest. On the other hand, some debts come with fixed, manageable monthly payments that, while they may seem substantial, won't change unpredictably over time. If you're primarily dealing with credit card debt, every day can mean more money you'll eventually have to pay back, thanks to those steep interest rates. So prioritizing this kind of debt might be wise. But if you're managing a stable debt like a fixed-rate loan, you might have a bit more wiggle room to focus on savings while you make consistent payments on what you owe. Number 2. Personal risk tolerance. Everyone's emotional relationship with money varies. This personal risk tolerance is essentially a measure of how much financial uncertainty you can handle without losing sleep. Some of us feel a tight knot in our stomachs just thinking about outstanding debt, while others are more unnerved by the idea of not having a safety net of savings. Recognizing where you fall on this spectrum can significantly influence whether you should prioritize paying off debt or build that emergency fund. Imagine you've recently received a bonus or some extra income. If the very thought of outstanding debt makes you anxious, you might be inclined to use that money to reduce the debt, even if it's not accruing high interest. On the other hand, if the idea of an empty savings account keeps you up at night, you might prefer to tuck that bonus away for a rainy day, even if there's a debt hanging around. It's all about understanding what gives you peace of mind. Number 3. Potential for unexpected large expenses. While we all hope for smooth sailing, sometimes life throws in a curveball, and these curveballs often come with a price tag. And whether it's a car that's showing its age or a certain kitchen appliance that seems to be on its last legs, you can sometimes foresee an imminent large expense. For example, anyone with a car knows it's not just about the monthly payments or even the gas. There are routine services, and then there are those sudden, unexpected repairs that can leave a dent in your wallet. Similarly, imagine your refrigerator or heater breaking down in the middle of a season. Without an emergency fund, these unexpected expenses could lead you to accumulate more debt, especially if you resort to credit cards or loans to cover them. Hence, if you can reasonably predict such hefty expenses in your near future, having savings in place becomes all the more crucial. Number 4. Stability of income. Stability of your source of income is another significant factor to weigh in. In simple terms, how consistent and reliable is your paycheck? Take Mark, for instance. He's a freelance graphic designer. Some months he's flooded with clients and work, while in others, he barely scrapes by. Compare that to Lisa, who has a stable 9-to-5 job with a fixed monthly salary. For Mark, building an emergency savings becomes crucial because he can't predict his next big paycheck. Of course, Lisa isn't completely safe either, since she may be at risk of being laid off. But in relative terms, Mark's situation is probably less stable or predictable. An emergency fund can act as a buffer during lean months, ensuring he doesn't dive into debt to cover his basic expenses. Whereas for Lisa, with her steady income, she might be more comfortable allocating a bit more towards paying off debts while maintaining a modest emergency fund. Number 5. Existing support systems. When navigating financial waters, it's essential to recognize the importance of our support systems. This refers to the network of friends, family, or community members who you can rely upon in times of need. Some of us are fortunate to have loved ones who can provide financial help or even a place to stay during tough times, while others might not have this safety net. Knowing where you stand can greatly influence your decision between saving and debt repayment. For instance, let's imagine a young professional living away from home who started work not long ago. If she were to lose her job suddenly, her parents have offered their home as a temporary place for her. reducing her immediate living expenses. In such a scenario, she might prioritize paying off her debt a bit more aggressively, knowing she has a fallback. But without such a support system, she might have focused on building her savings first. Number 6. Future financial goals and plans. Mapping out your financial journey involves more than just the here and now. It's also about where you see yourself in the future. These future goals and plans play a pivotal role in dictating your current financial choices. Maybe you're eyeing homeownership, considering an entrepreneurial venture, or planning a sabbatical. Each of these aspirations will have financial prerequisites, and understanding them can guide your decision to save or pay off debt. For instance, suppose homeownership is on the horizon for you. Securing a mortgage might be easier with less debt on your record, not to mention potentially qualifying for better interest rates. In this scenario, prioritizing debt repayment could be more strategic. Conversely, if you're looking to start a business soon and need capital, having a robust savings account might be crucial, acting as a safety net during the unpredictable early days of your venture. Aligning your current finances with future ambitions is key. Number 7. Current living expenses. The cost of your day-to-day life is another vital consideration. This encompasses everything: rent or mortgage, utilities, groceries, transportation, and even those occasional treats. Getting a handle on what you absolutely need to spend each month gives you a clear picture of how much money you'd need if a crisis hits and your income sources were to dwindle or disappear. Take Robert, for example. He lives in a city with a high cost of living. His monthly rent and utilities are steep, and he has no other viable housing options in the short term. For someone like Robert, building an emergency fund might take precedence, as his monthly outflow is substantial. If any unexpected financial strain were to hit, like a medical emergency or sudden job loss, without a decent savings cushion, Robert could find himself in a tricky spot very quickly. Knowing his living expenses helps him prioritize his financial moves. Now that we've got our key considerations mapped out, and your priority hopefully set, let's discuss actionable steps you can take today. Whichever way you decide to go, the journey begins with repeatable, consistent steps. Let's take a quick look at them. Start small. Remember the saying, Rome wasn't built in a day. Your financial stability won't be either. Instead of getting overwhelmed by the big numbers and expecting to completely reach your goal overnight, focus on small, manageable steps. Even if it's just saving a few dollars a week or paying a tiny bit more than your minimum debt payment, it's progress. Over time, these small amounts add up. Budget. If you don't already, start maintaining a monthly budget. Note down your essentials, your luxuries, and see where you can cut back. Allocate specific portions of your income to both savings and debt. Having a clear blueprint not only reduces financial stress, but keeps you disciplined in your journey. Seek expert advice. While there's a plethora of information online, everyone's financial situation is unique. It might be worthwhile to seek a session with a financial advisor. They can provide tailored guidance and may introduce you to strategies you hadn't considered. Check out these videos next for tips and tricks to up your savings game.